Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Here's your U.S. markets wrap with me, Ryan Huang. And we've got U.S. stocks slightly underwater as we see the S&P 500 dropping 0.5% to 6,299. The Nasdaq Composite lower by 0.7%, and the Dow Jones Industrial Average slightly down 0.1%. Now let's check in with Todd Rabold. He is the investment management partner at Callan Family Office. Todd, how are you doing today?
I'm doing well. Good morning, Ryan. Thanks for having me.
Good morning, Todd. Great to have you on the show. Let's check in now with what's going on with the markets. We've got a bit of a pullback. Earnings have been coming through. How much of it is being driven by what we are seeing right now?
Yeah, I think corporate earnings season has been quite productive here in the United States. We've seen about 75% of the companies report second quarter earnings, and 80% of the companies have beaten their estimates. The average growth of earnings was right around 10%, much higher than the expectations of 5%. So we're really seeing broad-based strength in corporate America, and in particular, the technology sector continues to grow faster than the rest of the economy.
Okay, so we've got more to come, of course, from the AI front. Is that going to be likely to support further upside for the broad market?
Yeah, I think so. The AI revolution, if you will, is in early innings, and many of the largest technology companies committed to spending in excess of several $100 billion to continue to build out their AI capabilities. And so you've seen a lot of companies that are benefiting from it, but there's many companies that haven't even begun to implement AI strategies. So we think that there's a long runway of growth in that particular part of the market.
All right, Todd. How do you square this with what's playing out with the outlook for global growth, where we've got tariffs hanging over the air, Donald Trump saying he might hike tariffs on India. You have also what is going to be potentially higher tariffs on specific sectors like pharmaceuticals and semiconductors. So all that could potentially weigh on how much people are spending.
Yeah, tariffs continue to be a focus for investors. I think we've made some meaningful progress with deals that were recently made with countries like the UK, European Union, Japan, Vietnam, and others. I think two important deals that haven't gotten done yet would be with India and China. And the administration is in active negotiations with both those countries. I think there's been meaningful progress made, particularly with China. India continues to be a challenge given some of the dynamics there and their purchasing of Russian oil. But I do believe that, we're closer to the end of this than where we were in April. You mentioned drug prices and semiconductors. That's a bit of a new twist, but the Trump administration has highlighted the fact that drug prices in the United States are significantly higher than other regions in the world. Part of that's the fact that the drugs are manufactured or sourced elsewhere. And I think he's really focused on trying to bring some of that manufacturing back to the U.S. and has talked about increasing tariffs over a period of time to encourage that behavior.
Okay, so if these tariffs potentially kicking in, what does this mean for perhaps inflation, where these prices could feed into higher costs?
Yeah, it's a great question. So the Federal Reserve is very much focused on the tariffs as a potential risk to inflation, towards inflationary pressures. We haven't seen an impact yet, really, but it's something that's certainly out there as a major concern. The employment data has come in a little bit weak over the past 2 weeks. And the Federal Reserve focuses on both inflation and the employment market. And so when the Fed met last week, they kept interest rates steady. But the recent weakness in employment data would suggest that the Fed is likely to cut rates, the Fed funds rate, by 0.25% in September, and perhaps another cut later this year. So I think that we'll continue to see more data points around inflation over the coming months. And should inflation stay in, call it the 2.5 to 2.8 range, I think the Fed will be able to cut rates. And if the Fed cuts rates, that will be very positive for both equities and fixed income markets.
Yeah, you mentioned jobs data. So we had the July jobs report come out last Friday, and then Donald Trump firing the labor stats chief and saying or claiming that she faked employment numbers in the run-up to the 2024 elections. How much of a shakeup is that for investor confidence in the markets right now?
Yeah, and that's a great point. So the jobs data has come in weaker than expected, and the past 2 months, June and July, were revised downward by a very significant margin, which really is a continuation of a lot of volatility in that data. And one of the things that we've noticed is the participation rate of creating that data has dropped fairly substantially from 90% of the participants down to close to 60. So that's creating volatility, and it does bring into question how accurate the data is. And so I think perhaps making a change at the head of that organization, while that's disconcerting, that may be a good move to try to get to a point where we're getting better data that's more helpful and more accurate on a go-forward basis.
All right, watch your space for new faces, at least for the BLS and maybe even the Fed in time to come. All right, looking forward, Todd, what's your take on where to go when it comes to places to park your money?
Yeah, so last time we met, we talked about our optimism for the equity markets, and we continue to be buyers, both U.S. and international equities. We think that the technology AI story that we discussed earlier continues to be a catalyst for higher stock prices. And we also think that the Trump administration will continue to deregulate a number of our industries, and that'll be a catalyst for further economic growth going into 2026.
Which sectors are you looking at in terms of deregulation?
So we think the financial sector clearly will benefit. The energy sector will benefit. Technology will benefit. For example, you just saw the Trump administration roll back some of the AI constraints for China buying chips. And so really think that there's a lot of opportunities for investors here in the United States.
All right, more deals to be done and maybe more deregulation to be had. We've been in conversation with Todd Rabold. He is the investment management partner for Callan Family Office. Todd, always a pleasure having you on the show. Thank you so much for your time and insights.
You bet. Thanks, Ryan. Have a good day.
You too. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.